Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I'm here guys to make a huge update on AMC. Nothing much happened this week in terms of levels. We are still close to the 40 area, but actually there is a lot of information to get from it. So let's get into it. Alright guys, so very quickly, daily time frame. 1, 2, 3, 4, 5, Elliott waves, guys. This is what we're looking for. 1, 2, 3, 4. So it seems we are in the fourth triangle wave, which is typical for fourth wave. And we are trying to predict whenever this is going to start to move higher strongly. So to do that, we need to find a breakout trend line. And I have one by connecting the highs here in logarithmic scale. Very important to be in logarithmic scale. You can see that this trend line is working well because it's giving us reactions. All right. Whenever your trend line is not perfect, you just move it slightly to make it perfect. Golden rule, the most recent past is the most important. That's why here I need to have this point into account. And here I just moved my trend line because of this rule. All right. So here we had some excess at the beginning. The trend line was like this. Okay. And here we have this excess. So I kept it like that at the beginning. You can see that here it gave me a positive reaction, but right now I prefer to have it like that. Okay. So it's arguable. It's my choice. I prefer to have it like that. Okay. So what is the situation? We have A, B, C, D, E. Okay. So the E wave, is it here? Is it here? Are we going to revisit the lower band of the triangle? I don't know. It's possible, but usually E waves are in 3 waves. So first thing, so ABC. So did we have an ABC here, or is the ABC going to be like that? I don't know, hard to say, but we have some hints. First, let's analyze closely this price action. What is happening? We got rejected first, we moved lower. How low? Okay, around the 61.8% retracement of this move, which is, you know, a normal correction. Below that, it's not looking good. It's a bit losing the bullish momentum. So here we didn't really lose it and we went higher right away, retested twice the next week. Then we found support on the 20 and 50 day moving average. Just like I showed you guys in my yesterday's GME video. On GME, you can see we didn't even touch it. And this was meaning the bears were not able to reach the targets and it was suggesting that bulls were strongly in control. On AMC, we are touching it, so we are staying above, so bulls are in control. But you know, we were not that bullish on the short term as we were on GME. And this is what I was telling you guys in my everyday recaps for free on Discord. For AMC and GME, every day I give you my view. And so here we are bullish because we are above the moving averages, which doesn't mean we cannot go lower. We can, like I said, have an ABC like this and it would be fine as well. So it's not my preferred scenario. This is the alternative scenario. So I can give it to you right away. We go here. Okay, we find more support and then breakout, retest, and we go higher. Alternative scenario. My preferred scenario is look at GME. So GME broke out already, same triangle. So GME, it's been, you know, already sometime I'm saying that is a step ahead because here my triangle is done since August. And to me, we have completed 1, 2, and we are in the third wave. Why are we in the third wave on GME? Because we have those very impulsive, strong moves that go through major resistance levels. This is the definition of a third wave. So that's why I believe this is a third wave. AMC is not, to me, has not started its major fifths, this one. And now, and you guys know that those two, you know, they move together. So sometimes the flows go from one to the other. I think that right now people are going to be focused on GME at the beginning of the week, maybe. Still, AMC is probably going to follow. Okay, if GME, for example, moves up by 20%, AMC is going to move up as well. I don't know by how much. But what I'm convinced of is that if GME confirms, you know, this move up, so by closing above 230, for example, AMC would have no other choice than doing the same at some time. So then, even if we don't have the breakout, to me, it's a buying opportunity, whatever the price. I mean, you know what I mean? If GME is there, AMC will catch up. So I'm going to keep an eye on GME to trade AMC. And once again, like I said, I was a buyer around this area. If we close above 44, 45, I'm going to add up to my position. And if GME closes above 230, I'm going to add up as well, whatever AMC's price. Okay. So this is the way I see things. So my preferred scenario, yeah, is this. I just show you that is that GME pushes higher, maybe pulls back a little bit. So AMC is probably going to test the 44 level, maybe consolidate a bit more and then move higher. Okay, and one more thing, why did we have a lot of information even if nothing happened? Because look guys, as I did for GME yesterday, let's check how much energy AMC has. So to check the energy, we have two different tools. You have more than that, all right? But there are two tools that I like to use on my hand: Bollinger Bands, BAM, and RSI. So let's check. Whenever they are tight, it means that the volatility decreased for around 2 weeks and it gives energy. So here they were tight here. After that, we had a move down, and now they are not tight, not wide, all right? Because here it moved a bit. So I would say we are medium in terms of energy. So no real information. And the second thing you can do is just by looking at the Bollinger Bands, we are medium. And the second thing you can do is look at the RSI. And the RSI, for example, on GME, we are close to be overbought. Normal, it's normal because we just had a huge run up. So that's why I think the GME needs to take a breath soon, either at 230 or at 250 very quickly. But AMC is in a total different situation. It has an RSI at 50. So to me, we have energy to break out. Okay, so this is good. So if we have a breakout now, it's much better than having a breakout on that day, because on that day we were having, even before the move up, we were having an RSI around 65. Okay. Right now, before the move up, we have an RSI 52, so neutral. So that means that whenever we're going to break out, we're still going to have some energy to push higher. Why? Because we had this build up phase. Why build up? Because some bulls are building up some long position and the market is building up energy. All right. You can analyze this word by those two different ways. So basically, to me, those consolidation period of low volatility, which is not very low here, that's why the Bollinger Bands are still a bit wide, are some very important phases for the market to build energy to be able to break out and push higher. So the fact that we are here hovering for the past 2 weeks around the 40 level, all right, between roughly 38 and 44, so 41 level even, is very good. We're building up energy. So basically we are building a bull camp just below the breakout area. All right. So bulls are gathering there, more and more bulls are coming. And suddenly one of them, I mean, it's not exactly like that, but they're all gonna start to buy more, volume is gonna increase and things are gonna look better. So this is my view. Now let's quickly check the synthetic short. As usual, guys, I'm keeping an eye on the 145 strike. Last time there were 20.2 million shares. Get synthetic short. Okay, here we go. So first, AMC DTC is the most important thing. Basically stable, slightly lower after the option roll because November has expired. People are going to roll on the next maturities. For now, they didn't roll everything they had. For this reason, the DTC is slightly lower. The maximum synthetic short has dropped a little bit as well. The synthetic short has dropped as well. So everything has not been rolled yet. So let's see what happens this week. I'm pretty sure that a lot of buyers will go to the option market if they feel a breakout might come soon. So I'm going to keep an eye on that. It's important. So for now, I would say neutral information, nothing very bullish because not everything has been rolled, but it's not bad news either because it's always like this after a maturity. So no information from that. And the 145 strike still growing, 20.5 million shares. All right, guys, keep that number in mind and we're going to check that again. Once again, for those who are watching that for the first time, the more options we have on those very out of the money strikes, the tougher it's going to be for option market makers whenever we're going to get close to that because they're going to be short gamma, which means that short delta, the short exposure is increasing on the upside, especially when we get close to these levels. So if we get close to it, there is a high probability we go through it. That's what it means and the way I see it. So once again, you know that my target is 135. You know how I found this target. I'm going to show you that again quickly. I'll just use Fib projections, the exact same thing I was doing in the past, and that worked very well in May. So we're doing the same up. We apply to the bottom of the force, and it gives us 137, something like that. But when I see this huge number of options on the 145 strike, it makes me think that if we get to 135, we might maybe have a quick run up to the 200 area or something, maybe 170, I don't know, something like that. And then new strikes are going to be open, and we're going to need to check if people go to it. If, for example, they open the 250 strike and everybody rolls from the 145 to the 250, I would need to reconsider my target. For now, this is not what we're having. My target is still 135, but I start to think that maybe it's a bit low. But for now, I keep that target because this is the best I can give you guys by using my tools. So that's it for today. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.